Yeah, environmental concerns come up with residential and commercial real estate. It's when you're looking at trying to find a good deal, odds are it's going to come up in your search. It could be chemicals, it could be fertilizer, it could be paint thinner, it could be petroleum.
One of the first red flags I'll look for is if we know there's a shop or a shed or something like that on the property, is there a bay or a pit?
Yeah, and we also see a lot of lead-wrapped asbestos pipes in larger buildings as well. So even if you're purchasing a commercial building, important to have somebody walk through.
The point behind this is, why are these things important? Obviously, if it's serious enough, it does cause your deal to potentially be canceled or not lent upon.
What is up, YouTube? Matt McKeever here, and today we've got Josh and Ehren back, and we're talking about 8 environmental issues that you guys really need to be aware of when you're looking at buying properties. Now, these can happen on any property, but in particular, as you start to get into investment properties, I think you're going to find this more and more common. And I imagine a lot of times people aren't finding this out until they've kind of half committed, maybe fully committed to a deal, and all of a sudden the panic sets in because these environmental issues can actually have big consequences to your borrowing, right?
Yeah, absolutely. For the newer investor who hasn't come across these issues before, it's usually after you've gone firm on a file and you're trying to close, and now you're running into issues trying to get it funded. So, some of them are going to seem kind of strange, and I know some of the conversations I've had, people are surprised about it, but all of these will definitely put some sort of halt on your file, and either have you to change to go to private or have some sort of holdback on the closing. So I guess just kind of jumping into them, and we'll touch base on them. So the first one, and the one that I've seen a lot of in the last 2 weeks, is railroad tracks. If you are buying a property, whether it's your primary or a rental, even like larger multi-unit type buildings, and it is in the immediate vicinity of train tracks, there's going to be some sort of immediate red flag from the lender. They're either going to ask for an environmental. You may get lucky and they may ask for just an environmental questionnaire, which is really just a couple quick check marks and circles, which is the best case scenario. But railroad tracks are definitely going to halt a lot of files or reduce the loan of value on the purchase.
Specifically because, traditionally, trains carry a handful of different types of products. It could be chemicals, it could be fertilizer, it could be paint thinner, it could be petroleum, it could be anything, and they've been around for such a long time that there is residue that comes off these trains. Eventually that residue soaks into the soil, goes in, and then moves onto your property. And the reason why financial institutions are so serious about this is because they're wholly equally responsible for any type of contamination on that property, as well as yourself as the buyer. So that's a ton of liability that they're not willing to take on. So you might got a really sick deal in your eyes, but if you didn't tell us, your real estate agent didn't tell you that that's going to cause you some financing issues, you're going to be rudely awakened when you realize that you possibly need a phase 2. We're going to get into the total cost of what that looks like, but railroad tracks in particular are something that most lenders kind of have some red flags raised.
And so is there a rule of thumb, like how close is too close, or is there a certain distance where we can kind of feel safe?
In my experience, it's being adjacent. So if you are adjacent, like if your backyard is a railroad track or you're right beside a railroad track, then that's a red flag. If you're like a street over, you're fine, because I don't think that there's going to be really any contamination coming into your property. But anything being adjacent to or right beside a railroad track.
Gotcha.
Yeah, and Google Maps is a really quick way to, just zoom out, take a look in the area, see if there's railroad tracks. If it looks like you're super close, just run it by us, say, hey, is this gonna be too close? And sometimes it does come down to the lender, but Google Maps is a huge friend to investors. The second one is mechanical shops, or any sort of like car repair type shop. there's oil, there's grease cleaner, there's a million different things that, get thrown on the ground, then they just spray it out, dissolvents, all that stuff. It all goes into the ground. Anytime you're within immediate vicinity of that type of shop. I just had one the other day where it was literally 4 doors down and there was a mechanical shop with train tracks on the back of it. The lenders just weren't having it, and they wouldn't lend on it. So again, like if it looks close enough and you're concerned, run it by us. We can run it by the lender, show them the Google Maps, say, hey, is this too close? What are your thoughts? And they'll tell us yes or no.
Yeah, I just had a client who actually closed on a previous mechanic shop. So it was in North York. He was buying it for his new business, but it was a commercial place, but he was just going to have his cars in there. He had a salt company and a driveway sealing company, so he wasn't going to use it specifically for working on cars, but because the past history of that place was the way it was, we had to get a phase 2, which ended up costing about $15,000 before he even went firm on the deal. So when you're looking at these types of properties, really important to understand the ramifications of what it's going to look like costs up front when purchasing these properties. But even as Ehren said, not just even purchasing the property, but anything even around these properties, if you're adjacent to them, it does bring up some concerns.
Yeah, and I think it's important to understand that sometimes this can even catch people off guard. Like you might be buying a property with a shop in the back, or maybe it used to be a mechanic shop a long time ago. One of the first red flags I'll look for is if we know there's a shop or a shed or something like that on the property, is there a bay or a pit? If there's a bay or a pit, there's a good chance they were doing a decent amount of high volume oil changes or other sort of work on vehicles or other machinery, and that's usually immediately going to be an issue. Oftentimes what would happen, right, is they'd have an underground oil tank where they would dump in the old oil. Oftentimes, again, over time, there's leaks or the seals give, and eventually you start to have ground contamination. So again, I've seen it in times where it was more of a hobbyist, but I saw that bay in the back in the shed and I was like, no, I'm going to move on from this.
That's probably a good idea.
Yeah. The third one is dry cleaners. Dry cleaners, not specifically laundromats. I mean, laundromats may pose a concern as well too, just as a red flag. So I mean, be aware. But dry cleaners in specific, especially if they do their own in-house dry cleaning, if they're not outsourcing it, you're going to have some issues. If it's been around for like 40, 50, 60 years, there was some chemicals back in the day that they were using, some heavy dissolvents, flag, super toxic type stuff, immediate types of concerns. So, just take a look, do some due diligence. Again, like Google mapping your area, figuring out where it is. Dry cleaners, laundromats, they'll definitely have some red flags. And again, you might need some sort of environmental questionnaire.
Mm-hmm. The most prevalent culprit that we see, gas stations. They are everywhere, and they will affect the value of your property and the type of lending you can get on your property. Specifically, if your property is adjacent to or beside or across from a gas station, most lenders are going to have an issue with financing your property. So what happens is, obviously there are large underground storage tanks. So a lot like what you said, for the smaller underground storage tanks, these are giant storage tanks that hold gas. Obviously, the environmental concerns of what could happen from the spillage, from the overage, from leaking cars, from everything. Most lenders will not lend on properties that are adjacent to those specific gas stations. We've seen there's obviously some private lenders in the market who do specifically focus on financing these types of properties, but if that's not specifically the type of financing you were looking for, it might be a rude awakening when you have to realize that you have to close privately or go get a phase 2, which again could cost you a significant amount of capital.
Mm-hmm. And it's important to understand that when we're going private on maybe some of these more complicated or potentially risky properties, there is significant expense, right? If you were thinking you were going to get an A lender and now all of a sudden we're going private, that could change your bottom line as an investor. So really important you guys think this through before just blindly jumping in and going firm.
Yeah, and just because you're acquiring it privately doesn't always mean you can get out of that private as well too. There are some of these buildings that just have a private mortgage on them for the life of ownership, so just be aware.
Historically, you are getting a sweet deal on a property. So if people don't know, they're going to be like, oh man, I'm getting a crazy deal on this triplex. It's like, you are. Like if you take a look at the market in general, you're getting a sweet deal, but the type of financing you're going to get might not allow that deal to be viable for you, which could be a challenge. Even, trying to flip a deal like that and trying to sell it after the fact, you could have challenges with being on market for a prolonged period of time because just the appetite for people who want to own those properties isn't quite there.
Yeah.
Definitely. Number 5 is underground storage tanks themselves. Now, obviously these are underground and aren't going to be available to just the eye of the average person or Google Maps. This is something that's going to come up during an initial phase 1. So if you are getting a phase 1 done because you're purchasing a commercial building or because you are close to train tracks or a gas station, this initial phase 1 is going to take a look at things that are in the area that could pose any potential hazards. So storage tanks are one of those. They are documented in terms of their location. It's going to take a look at any current ones or records of where ones previously were. And if they're in a certain vicinity of your building, you're probably going to have grounds for a potential phase 2.
Mm-hmm.
Number 6, previous tenants who use chemicals. This is an interesting one. So obviously, as Ehren said, dry cleaners, so there are some really harsh chemicals. Back in the day, we didn't know were super harsh for us, and they were kind of used in just everyday business. That if there is remnants of that on your property, that could pose a serious issue. Things like dry cleaners, things like mechanical shops, as we already spoke about. Any sort of pesticide company, anybody who's wholesaling any sort of chemicals, antifreeze. There's a handful of different places that would hold these type of hazardous materials. And if there is some sort of written history of that and the lender were to find out, then they would obviously have some issues or want to dig in a little bit further about the history behind what those chemicals have done to the property itself.
Mm-hmm. And even if we're thinking about, potentially like farm supply companies or different sort of like trailer yards and stuff like that, sometimes what you'll see is like above ground gas or diesel tanks, right? And again, oftentimes they've been there for decades, or even longer. Oftentimes you'll see them kind of rusty and stuff like that, and if it wasn't appropriately dealt with at the time that business kind of shut down or wound up, again, over time that can seep out and really have consequences.
Yeah, and the previous tenants can be tough in terms of if you're buying a retail building. Obviously, if they aren't in there, you don't know. Do your best to just ask the seller what the history of the tenants would be. Again, on some of these retail, it's going to be required that you're going to have a phase 1 most likely. A phase 1 is going to pull up a previous tenant history of that building, and if on that tenant list they reported dumping certain chemicals or disposing of certain chemicals, that can get flagged and may require a phase 2.
This also includes past grow ops, or any places that were caught creating some sort of drug or illegal substance. Obviously, that is going to have issues with mold in the house, any sort of moisture, chemical issues if there was like a fire or something like that or whatever happened. Most lenders don't want anything to do with those types of properties.
Mm-hmm.
Number 6 or number 7 is asbestos. So obviously asbestos, not a very great chemical to have in your house or to have on your body. If your inspection report in your property shows any traces of asbestos, lender's either going to do some sort of holdback on the property until you remove that. So essentially, let's say it costs $10,000 to remove it. They'll hold $10,000 back off of your loan amount. You'll have to remedy that situation, and then they will reimburse you the cost. If it's substantial amounts on some of these older homes, the lender may just cancel the deal. You may have to close it privately, remediate the whole situation, usually probably some sort of gut job, clear it all out, get a new type of insulation in there, and then go back to a residential lender, get the refinance done after completion.
Yeah, and we also see a lot of lead-wrapped asbestos pipes in larger buildings as well. So even if you're purchasing a commercial building, important to have somebody walk through and let you know what the status is of the actual building and the pipes that are in the building. Because if you have to either rewrap all those, or if you have to take out a large portion of the current piping that's in the building, that could be a serious expense. Some lenders are okay with having just wrapped pipes. It really just depends on who you're looking to go with and the extent of how much asbestos is actually in the building.
Yeah, and it's important to understand asbestos can be in a lot of different things, right? Especially when we're looking at older buildings. So it could be in like the siding, it could be in the flooring, it could be in the shingles, it could be in the insulation, it could be around the ductwork, it could be around pipes. And also really important, if you guys are looking at maybe buying old institutional type buildings, very often you're going to find issues with asbestos. So thinking of schools or things of that nature.
For sure, for sure. Last but not least, number 8 is UV insulation. A lot of older houses have this type of insulation in it. It isn't necessarily like a do or die moment for most lenders. Most conventional lenders have created a process to be able to deal with it. 9 times out of 10, it's just a holdback. What they'll do is they'll require some sort of quote for remediation of the insulation, and then you'll close on the transaction. Your lawyer will then hold whatever the quote was in escrow in their like trust account. Once it's complete, you can show proof that the project is being completed and it's being remediated. Your lawyer will then give you the money back. So that's not a deal killer. Most lenders just want it out of the house for insurance purposes and for liability purposes. So it's important to note that you can just remediate it. Yeah.
Yeah, and I mean, like, I think, you know, the point behind this is why are these things important? Obviously, if it's serious enough, it does cause your deal to potentially be canceled or not lent upon. Again, just because you can close privately on some situations, near gas stations, near train tracks, doesn't always mean there's a conventional refinance out of that product. So talk to the mortgage broker, talk to us. Let's run the deal by our lenders, make sure that they're good to lend on that at some point. Obviously, some of these other things like the UV, the Urea, formaldehyde, insulation, the asbestos, stuff like knob and tube and that aluminum wiring, you know, that can be dealt with, that can be remediated, and then, you know, we can either do a holdback or close privately, gut the place, come back in, and then refinance back out. Those are, you know, the better term situations. Stuff like train tracks, obviously we can't reposition the train tracks. You know, phase ones, they're somewhere around $1,600 to $2,500 depending on the extent, how fast you need it to get done, the company. You know, the phase 1 really just looks at historical data in the area, and all the phase 1 does is says there is no need for concern or there is need for concern. If there is need for concern, we go to a phase 2. Phase 2, you know, drills core samples. They're going to do some tests to make sure either there is or is not any contaminants in the ground. Phase 2s can be, you know, anywhere from $2,500, $3,000 up to, you know, $30,000 depending on the type of foundation. Are you drilling the bedrock? You know, they have to hire out a contractor. They have to hire in the service providers to, you know, figure out where all the lines are to make sure they're not drilling into it. So there's a few other costs that go into it. It can be an expensive process, but again, if you're really into the building and there's huge potential and it makes sense, you know, phase 2s are an important step when needed. So just avoiding some of the extra costs that can come along with those environmental issues.
Yeah, environmental concerns, you know, come up with residential and commercial real estate. It's when you're looking at trying to find a good deal, you know, odds are it's going to come up in your search. Just keep in mind the overall cost and what it's going to cost you to be able to really realize if it's even a viable project. If you want to get into purchasing something that possibly has any of these issues with it, understand that the upfront capital required to know if a conventional lender is going to take a look at your loan is significantly more than just finding another deal. You know, just set expectations if you're looking to purchase properties around with any of these terms in them, because it may be a situation where you no longer are able to get some sort of conventional financing.
Yeah, I think it's really important just to understand the consequences here. We're not saying you can't or shouldn't buy these properties, but make sure that you are going in eyes wide open, right? So obviously we've been really focused today on how it can impact your financing or your ability to get mortgages. But beyond that, it also can impact your ability to resell the property, right? And if you want to resell it and get top dollar, you likely are going to have to take on whatever remediation issues are involved. Again, those can really balloon, and it can be shocking how much it can cost to remove a little bit of asbestos, or how long it can take for a gas station property to be considered to be remediated. So again, sometimes you can't even really just spend your way out of these problems. Sometimes there's a time aspect as well. So really appreciate you guys breaking it down for us. If you guys want to reach out to Josh and Ehren with all your problem properties, we've got their contact information in the video description down below. And again, understand that these things add time, right? Getting an environmental done, getting a phase 2 done. This can really elongate your ability to close on the property. So have these conversations early if you are looking at properties like these, and make sure you understand the consequences. Again, just really appreciate you guys bringing this up for the audience.